So we're coming into the end of August here after a very interesting summer in the markets, and especially after the Friday, August 26th commentary here from Fed Chair Powell and others at the Jackson Hole meeting of central banks. So you can see that the market took a dive, but let's look at what's next, because the S&P is at a key juncture. I want to take a close look at it with you. So before we dive into the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Right, here we are in my charts. We're going to start with the monthly chart of the SPY. So that's the S&P 500 ETF that tracks the S&P 500 stocks. Now you can see that in this monthly chart, every candle is representing 1 month of price action. We're almost at the end of August, but not quite there. You can see that August traded higher, posted a high above what we had in May, and has been backing off. So you see this line here at 402.53. That's a support level that was drawn based on the monthly candle from July using my Gann candlestick techniques that actually provided support during Friday's very sharp fall. And this was a margin of less than 2 points, guys. 402.53, and the actual low was 401.20. Would you like to be able to calculate support and resistance using candlesticks in that way? Well, that's something I teach in Gann Candlesticks, where you can learn more. So let's take this information and move along to the weekly chart, and this time we're going to transition from the SPY to the E-mini S&P 500 futures, which are my baby, the futures market that is related to the S&P 500. So here you can see the ES weekly chart still have candlesticks now representing 1 week of price action for each, and we have my RSI power zones down below. This is my favorite momentum indicator. So I have not touched this chart since I last shared it with you in my most recent skinny dip, but I'm going to go ahead and show you how I would do the analysis right here, right now with you. So the first thing is to kind of take away any levels that have been violated that are no longer useful. So I'm just going to edit my Fibonacci tool here to remove the 50% Gann retracement. Now I'm going to look at the move that has ensued off of the week ending August 19th high. This is a new area that I can find support and resistance based on Gann 8's levels, and I'm going to narrow into the ones that we have not crossed through. So you can see that this move down on the ES futures to 400675 that we're currently holding is just 20 points away, 23 points away from a major 50% retracement. Now, that doesn't in itself mean that the market's going to come down there and then just stop and turn back higher, but it definitely shows that buyers sort of are hanging out there and they may support the market a bit. Also on the weekly ES chart, you can see that the RSI power zones have come back into the bull support power zone and are attempting to stabilize. They've kind of gone sideways here and might be getting this market ready to recover higher and pare some of those losses from last week. So let's go last but not least to the daily chart of the E-mini S&P. And again, I've not touched this chart, this particular one, since I last updated you on a skinny dip. So let's come into the closer price action here. And you can see that there's this level 4113, which was a very important support that I pointed out days before the market moving events that were at Jackson Hole. And I said, you can go back and check my video on this, don't take my word for it, that the market might trade down, test that support level, but then bounce. Now, I thought there was room for that bounce to potentially bring us back to the highs from a couple weeks ago, but that was not the case. The market reversed sharply lower on Friday, very soon after those 10 a.m. Eastern comments started coming out of Fed Chair Powell's mouth and really dropped like a rock. The thing is that my traders, especially those following me in the skinny and the mini, were prepared for this because I share ES research multiple times a week, often 5 days a week if I'm not traveling, and I pointed out a couple things happening on the chart. First, there were key trend line crosses, and those trend lines are in a full skinny and a mini report, but the intersection of two key trend lines suggested that Friday would be a high market turn kind of energy day, and that sure did happen. And where the market turned from was just a couple points away from a resistance level, so an area of supply in the market, a place where sellers are hanging out, and the market came off of that. So the resistance area was in the 4222 range, and our high that we had was at 4217. Again, just several points away. So guys, if you map out your trading on whatever market you're monitoring on the monthly and the weekly and the daily time frames, then when you get to your intraday trading, your day trading, you'll have a much better chance of pulling profits even in really crazy volatile moves like this. Because I did warn you that the market probably would be volatile on that day with that news event, and this is what unfolded. So that's where we are. Where is this market headed? Well, like I showed you on the weekly chart of the ES, there is a key retracement level that we are now getting close to, that 50% retracement, and that is at 3983.25 on the ES, comparable to what I showed you on the SPY chart and the ES weekly. Looking at the RSI power zones on the daily chart, they are also holding in the bull support power zone. What other time frame is showing that? Right, the weekly, I just showed you that. So this is giving some hope, okay? It's not necessarily an indication that we're going to recoup all the gains off the high from August 16th, but it's definitely a good sign that the fall on Friday was reactionary market news and there will be some recovery chance ahead. So what does that mean for you as a trader? Well, if there's a recovery in a market that's weakening and you have a position long that's kind of sitting underwater, it's got paper losses, if you will, it gives you an opportunity to exit that position for either no loss near break even or minimizing that loss. And if you are a trader right now that has no positions, you've just been staying out of the way of this market, then this recovery might provide an opportunity for short-term longs, or it might provide an opportunity to take advantage of any other round of weakness that may show up in the markets. And where this is going to be evident in most detail, again, is in my Skinny in the Markets reports. Because it's one thing to kind of give a layout for the week ahead and say, this is what I think is going to happen. It's a whole other to follow the subsequent actions that unfold in the market and be able to pivot with you guys and give you the most really efficient and timely analysis to be able to prepare for that trading day. I also do this with my stock picks. So I normally have been doing stock picks on a Tuesday night. This summer I've been experimenting with doing them on the weekend, but as you might be able to tell from my little different surroundings here, I have traveled. I'm visiting my family back in New York, so this is me in my mom's house and my desk setup that I have there. So I've got family and friends I'm visiting with, and so I'm going to be posting stock picks later in this week. But I'm also doing that because I want to see how this post-Jackson Hole energy shakes out in the market. Are we going to find a footing and be pushing up from there, or are bears going to come back in and push this lower? And I will give you long and short stock picks accordingly from S&P 500 components, depending on how that unfolds. All right, guys, so now you've got a good look at what has happened in the past week on the SPY and the ES, where we might be headed for the ES, and I'll finish out here with a couple of important support and resistance levels. Again, these will be in more detail in the Skinny and the Mini, but here, let's take a look at a couple levels up ahead. So I'm just going to draw these live with you here, right? And how I'm deducing them is something I lay on the report. But one is here at 4110.75. That's a very important prior support, now potentially becoming resistance. Another support level is 3964.5, and you can see that that's very close. If I move the label out of the way here, that's very close to that 50% retracement at 3983.25. So those are the big picture levels to watch here on the daily chart. If we get above 4110.75, then the chance for this recovery to have some legs is stronger. But if we weaken below 3964.5, then I think our journey back towards the 3900 or even 3800 level is much more likely to come up quickly. Remember to subscribe, like, comment down below, follow, and join my tribe if you haven't already, and I'll catch you on the inside. You can sign up with a link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.